story. All right, now that we've covered all that, let's get started with the need. There's currently a growing need for life insurance coverage. According to the 2020 LIMRA Insurance Barometer study, the likelihood that a consumer will buy life insurance is at its highest point in the last decade. 70% of respondents to that study said that they need life insurance. That suggests a total market demand of 179 million potential customers. But there's an old saying in our business: insurance is sold, not bought. When it comes to selling, research shows messages delivered, this is the stat you see on your screen, messages delivered as stories can be up to 22 times more memorable than facts alone. So today I want to share a story with you that I think is going to help clients better relate to the value of a hybrid life insurance solution by creating a relationship with the client's mind between a smartphone, the tool we use every single day, and a life insurance policy. We can convey the convenience, the flexibility, and sophistication of the FFIUL solution. All right, let's start to make that connection between the smartphone and the FFIUL. The people we know, they're more likely to pay attention to things they're familiar with, things they use every day. To me, this makes perfect sense. It's obvious. Many on this call, you might remember a time when phones only made phone calls. Cameras only took pictures. You needed a computer to surf the internet or check your email. In the past, we had to buy multiple devices to accomplish all those tasks. But as technology evolved, so did our expectations, and today we look at products that serve multiple needs. That brings us to the smartphone. The rise of the smartphone forever changed consumer technology, consolidated multiple devices into apps on a single device. The smartphone still makes phone calls, but now it uses apps to take pictures, to play music, send email, and a lot more. It allows us to solve multiple needs in a single product. So what do smartphones and life insurance have in common? Well, at one time, life insurance did a little more than offer a simple death benefit. What if a client wanted financial assistance to cover medical bills in the event they suffered a heart attack? What if they needed help to pay for assisted living if they developed dementia? What if they wanted to supplement retirement savings with tax-free income through loans or withdrawals? They had to purchase multiple products to do those things. This made protecting their family more complicated and also more expensive. But this is where the FFIUL comes in. Transamerica Financial Foundation IUL is a multi-purpose life insurance solution with the applications to help address a client's multiple needs at a lower cost, and that's the key. Did you know that the 2020 Life Insurance Barometer study I mentioned earlier found one of the top reasons people buy combination life products is to avoid the expense of multiple policies? All right, so if we're looking at a life insurance policy, what are those core apps? On the phone, you have the phone. It'll obviously make phone calls. You've got your text. You've got your email. You've got your camera. Those are like the core functions that are built into every smartphone today. All right, now on the IUL side, we're looking at growth potential. You see that upper left-hand side of your screen there. We have the growth potential through indexes and strategies, combining those together. And at Transamerica, you have that 15% cap. That's our strategy on the global index. You have the federal income tax-free death benefit. A very important part of every single policy at Transamerica is that death benefit. You see it big, bold, bottom right of the screen. You have downside protection of the floor. That's another part of our strategy. Downside protection. At Transamerica, we have that 75 basis point floor that protects a client's cash value, even if the index is down. And then, of course, we have tax advantages. That's the fourth core application of an IUL. You should know, if you don't, you should know that life insurance is a special asset class. It's treated differently by the IRS. It allows your clients to have the potential for tax-deferred growth. the freedom of tax-free withdrawals. And when they need it, they can access their policy value through tax-free loans and withdrawals. So the combination of these benefits, in addition to a menu of optional, customizable features, that allows the policy to be tailored like apps on a smartphone to each client's personal situation. So if these are the pillars here, what are some of these other options that might get a client's attention? Well, the first are optional accelerated death benefit riders. Accelerated death benefit riders. They can help protect what a client has worked so hard to build by offering access to a portion of their death benefit while the client is alive. We do this through chronic and critical illness riders as well as the long-term care rider. Long-term care rider, one of the things that makes Transamerica so special in this space, not just long-term care, but also how we handle chronic and critical illness. That's different from the way our competitors do that. Most clients have experienced the emotional, the financial burden of a chronic or critical illness in their family. After all, you think about it, 7 out of 10 people turning 65 today are going to, at some point, need some type of long-term care. Think about this stat. Every 40 seconds, someone suffers a heart attack. So it's very likely clients are going to need this type of protection. Another key option for states where it's available, the concierge planning rider. It's powered by Everest Funeral Concierge. It's a first-of-its-kind bundle of funeral planning services and support that can take the burden off of your clients' loved ones when the time comes. This feature is available on every single policy, $250,000 or higher when they're not on direct bill monthly. All of these options, plus world-class index choices, other top-of-the-line customizable features, additional optional riders available at and after issue, all that flexibility. These things together create the versatility to help set the FFIUL apart from anything else that's available on the market today. All right, so let's take a look at what this looks like when you put it all together. This is a great little slide for you. Take a screenshot of this because it really explains in detail all of the options that a client has through the FFIUL. You have a multitude of additional features, optional riders. They give clients the flexibility to customize a policy for their personal needs. And we're ultimately delivering a differentiated strategy through a customized life insurance solution, just like choosing apps on a smartphone. And we're going to meet your clients' expectations, their needs for protection, their need for growth, their need for legacy. Now, we are in a competitive landscape. Here on this slide, you're going to see many of the ways that Transamerica is set apart in the IUL space. And all of these reasons why the FFIUL is the number one selling IUL in the industry. These are the reasons why Transamerica, or these are the features that set Transamerica apart from our competition in the space. You see, the first is a very innovative product. We're the only product out there with the concierge planning rider. We have this FFIUL available with critical, chronic, and terminal illness. Those are all accelerated death benefit riders. It's available with living benefit riders and long-term care rider on the same policy. You could get long-term care plus critical illness plus terminal illness all on the same policy. Long-term care rider coverage up to $2 million. The base insured rider is available with long-term care rider. That means your client's legacy stays intact even if they become chronically ill. To date, we have the most consistent cap on the platform. In fact, this current version of the product, the FFIUL IUL 09, has never lowered its cap. Got that positive floor that I mentioned earlier. Even if an index is down, your clients will get a little bump in policy value on their statement. We have a high maximum illustrated rate, 7.1% currently. We offer long-term care rider benefits on policy using the increasing death benefit option. That is one of the most powerful ways Transamerica set itself apart in the long-term care space, is by using an increasing death benefit with long-term care And what are our claims based on with long-term care? They're based on death benefit at time of claim. That is a huge differentiator. Very competitive features there. And of course, reasons 11 and 12. There's no simpler story out there, folks. We are straightforward, transparent. We don't deal with participation rates or spreads that can make this product very, very complex. It's simple. We have a cap, we have a floor. Those are world-class, and we offer only world-class indexes. And when you're choosing a partner in the space, there's none better than Transamerica. We have a 100-year history of helping clients secure happier, healthier futures, live their best lives. Transamerica has A ratings across the board. More than 12 million customers worldwide. In 2019 alone, Transamerica paid out more than $50 billion in insurance, retirement, and annuity claims and benefits, while servicing more than 14 million in-force policies. When you are choosing a partner in this space, those are exactly the type of numbers you want to see. Okay, let's get back to the strategy. The foundation of the whole presentation when it comes to a smarter IUL, the foundation of it is discovery. Getting curious about what will motivate the person across the table from you. And it's really pretty simple. We want to find key moments in a person's life or key ideas in a person's mind that become an impetus for action. As part of your financial needs analysis, here are some questions that you can ask to help you uncover somebody's frame of reference. Questions like, have you ever known anyone who suffered from a serious medical condition? Do you have any concerns about outliving your savings? Do you see income tax rates changing in the future? That's a really important question. And in fact, I'm going to pose this to the people in the audience here. How do you see income tax rates changing in the future? Because that tax story is a very critical component to people capturing the idea and fully understanding the impact we can have on their lives. Now, let's get to a few real-life examples of how asking good questions, getting curious, can help uncover clients' needs so the FFIUL can create a personalized protection plan. Okay, here's Mary. She's 38 years old, software engineer. She just got a promotion. She has some student loan debt. She has a child. Okay, now in the old days, we would have tried to sell her 5 different products. But today we can offer her one solution that can fit right in her budget. So we do a quick needs analysis. Mary shares the following concerns. You see them on your screen there. She wants a death benefit to help replace her income. She needs some additional life insurance to cover the student loan. She's paying for child care and a mortgage. She wants permanent coverage, but she needs some flexibility in premiums. She also knows through her own personal experience that caregiving for someone with cancer is very expensive and that medical insurance doesn't cover the entire cost of all medical conditions. I think we all know that here. So together with the guidance of her agent, Mary and her partner put together a strategy she feels addresses her needs. You see that strategy there. She starts with an income tax-free death benefit of $350,000 at a premium of $300 a month. The base insured rider allows Mary to assign $100,000 in death benefit coverage for 15 years to coincide with the time remaining on her student loan. Adding chronic and critical illness riders is going to help Mary's loved ones in the event of a qualifying medical condition. She's also happy she can get that chronic illness rider, the critical illness rider, the terminal illness rider, and the average concierge planning rider at no additional premium. She chooses a mix in her investments of the S&P 500 and global index accounts. That gives her the potential for tax-deferred policy value growth, as well as access to tax-free policy value through loans and withdrawals up to the basis if she needs that. So this is a very complex situation. As you know, planning for someone's financial future, it can be very complicated, but this is a perfect example of how we can plan for all of those things in one policy. A design like this can help address multiple needs, like leaving a legacy, preparing for the potential costs of unforeseen medical conditions, and also building policy value, all in one policy. All right, let's take a look at another example. This is Gary, 55-year-old business owner. He's married, 3 kids. As part of his financial needs analysis, Gary shared what you see on the screen here. Okay, he wants to leave a legacy. That's important to him if he dies prematurely. He needs to consider child care, mortgage, income replacement. His business is successful, it's growing, and he had to care for an aging mother with Parkinson's. Okay, he knows what that costs, he knows the burden that it is, and he doesn't want to be a burden to his own family should he develop a similar condition. And so with the guidance of his agent, Gary and his wife have put together a plan that they feel addresses their needs. Have a face amount of $250,000. Premium for that 55-year-old is $564 a month. Gary likes his premiums are flexible. They could be reduced or even eliminated in 15 years when he's on a fixed income in retirement. He selects long-term care on his policy because medical bills associated with chronic illness could jeopardize what he's worked so hard to build. Additionally, any unused death benefit will be paid to his family, federal income tax-free. He also chooses the global index account, giving him the potential for up to 15% tax-deferred growth on cash value. That's that cap, 15% cap on the global index. Also guaranteeing that floor of 0.75%. He can access that policy value through tax-free loans and withdrawals. And you remember, somebody in his family had Parkinson's, right? So he understands the burden of planning a funeral for a loved one. And he appreciates that CPR rider. That's that funeral concierge rider from Everest that you can add to these policies because he wants to reduce the burden on his family whenever he passes.
My meeting already started.
Now, keep in mind, Gary may have concerns about what his family would do with his business. I've got a business owner here. So this is another opportunity for you. Often a business partner's spouse, they have no ability, they have no interest to run that business when the business owner dies. So they might want to make sure they get fair value for that business. That might be important to them. And that's just an opportunity for you to further help a family. All right. Can you do this for me, folks? Can you think about using this presentation to help families in your network? We have here some great resources for you around this strategy. Why don't you take your phone out right now, use the camera to scan the QR code on your screen. That code's going to give you access to all the client-approved pieces that you see here, including social media posts, the consumer brochure, a video, very effective video, and a presentation deck that you can use. It's client-approved, along with a thought leadership article that you can share with your network. Go ahead and scan that QR code. All right. And as always, we're committed to bringing you more tools, more resources to help you build your business and help more families. In front of you here, you see the Gift for Life presentation, highlighting juvenile policies, the way we help families in that space. Many of you were at the presentation in October, late last year, when we presented the long-term confidence material. You can scan the QR code there for that material as well. You can find all of this material on the QR codes on that screen. We'll give you a minute to download those as well. All right, and a final resource for you. Study was just released this month, indicated the number one reason people buy an IUL is for accumulation. This piece that's client approved here, it's product agnostic. You can use it to help clients understand the power of saving through cash value life insurance. All right, that brings us to the end of our presentation today. I'm so glad you could join me. It's my hope that you found a tremendous amount of value here in these resources, as well as another way to clearly explain the many benefits found in the FFIUL. And so my question for you is, would you give us an opportunity on your next IUL case? We would greatly appreciate that. All right, now that is the end of our formal presentation. Let's open this up to any questions from the audience. What questions do you have on today's presentation? All right, I do see some questions already in the chat. Let me go ahead and get to the beginner there. Okay. Neil asks, do we need a health license to add the long-term care rider to an IUL? Yes, you do. You need your life and health license. Very important point. You have to have those licenses in the state in which the application will be signed. Okay, so if you're in Texas, you have an app in Florida, you want long-term care on there, you need to have your health license in Florida as well. Okay, be sure you get the licensing right before you sell. Good question. All right, next question. What is the difference between long-term care and chronic? I love that. Leonora says, I noticed long-term care has charges while chronic doesn't. Great question. Okay, difference between long-term care and chronic is the coverage. The coverage. Okay, on chronic illness, your client cannot do 2 of the 6 activities of daily living. They'll be covered under either rider, either long-term care or chronic illness. Let's say they have the chronic illness rider only. They will not pay a fee for that rider unless and until they accept a claim from Transamerica. What would they be able to claim? Well, they could. Transamerica could pay out up to 90% of the available death benefit to a maximum of $1.5 million. So 90% of the available death benefit up to $1.5 with chronic illness. But Transamerica will take into account how long the client has owned the policy and their reduction in life expectancy due to that illness. Okay, so it's going to be a smaller amount available compared to long-term care, which I call the holy grail of riders. Okay, if your clients qualify for long-term care, they probably need to think very hard about putting it on that policy. Probably something they should do. Okay, why? Because Transamerica does not take into consideration the reduction in life expectancy or how long a client has owned the policy. If the client has a long-term care rider, client has access to 100% of the death benefit at time of claim. 100% of the death benefit at time of claim paid out in 2% increments. Yes, there's a hard cost for it, but there's a tremendous amount of value in that rider. Definitely something that you should look at if client, in fact, qualifies for it. All right, good. Diego says, I see the IUL has a cap. I have heard of clients that have purchased IULs in the past get letters saying their cap has dropped to a lower amount, so the cap is not guaranteed. True, Diego. That is true. Cap is not guaranteed. But remember, when we talk about caps, you want to go with a partner who has consistently high caps, consistently steady caps. In the history of our IUL, dating back many, many years, we've changed the cap twice. Once to increase it, once to bring it down to its original cap. And that's only on old policies. The current version of the IUL that we currently sell, the IUL 09, we've never lowered its cap. It's been 15% with the global index for many, many years now. And we work hard to keep it that way. Great question. All right, good. Juliet says, can you share slide 9 again? I need a screenshot. I certainly can get back to slide 9. There you go. Oh, what a great slide. Thank you. Great question. All right. Mila asks, is long-term care increasing according to the death benefit? Yes, it is. You'll see this on any illustration that you run. The amount of long-term care available to a client is the death benefit at time of claim. So if we're increasing that death benefit for many, many years, it creates a huge pile of cash for clients to have access to if they become chronically ill. Let's see. Good questions. Great job, guys. Mila says then, does Everest give additional extra death benefit or they just help with the service? Well, if you have a standalone Everest policy, there will be additional money for a death benefit. If you're using the CPR rider as a rider on the FFIUL, there won't be an additional amount available to the client, but we do fast pay, which means your client is going to get $25,000 within 72 hours of claim, which is going to pay for most any funeral out there. Good questions. All right. Alan says taxes going up in the future. I would tend to agree, but do your own research. See if you come to the same conclusion. Wheelie says, since long-term care increase with the FFIUL death benefit, with the increased death benefit, does the long-term care cost also increase? Yes, that cost will increase as your clients age. But remember, the cost of this long-term care rider is pennies on the dollar compared to a standalone long-term care product. It really, the cost is very, very low comparatively. And with all the value that's built into that rider, I think it's well worth the cost. It certainly is for me. I covered, Ernesto said, what's the difference between long-term care and chronic illness? Covered that already. Great question. Thank you for that. Ooh, let's see. Next question. And sorry if we're getting a lot of questions right now, and it's kind of messing with my order of my scrolling. So I'm sorry if I missed some questions out there. Vicky says, I think this was the next question. Will you please email these QR codes? Vicky, you know what I'll do? I'll go back and show these QR codes. Okay, and I'll just take my time here. Here's the first one for the resources that we had today. Okay, and then also remember the materials there are on the bottom left for you guys. All right, Paul says, when the base insured rider falls off, say as an example at 15 years, does the premium being paid also drop? Yes, it does, Paul, because they no longer need that big death benefit and the base insured rider that they had been using. LaQuisha says, is the concierge benefit rider for the IUL in Florida? That I don't know. LaQuisha, check with your local wholesaler or call, better yet, call the sales desk. And I have not mentioned this yet. So I'm going to give everybody the national sales desk phone number right now. For these sales questions and for particular states, they're going to be able to help you. Their number, and guys, the sales desk is great at Transamerica. If you don't know, it's not a bunch of kids who came, they're trying to find their way after college. No, these are true high-level professionals, over 100 years of combined life insurance experience on the desk. And their number, I'll give it to you now. It's 800-322-3796. Again, that's 800-322-3796. All right, good. Zhang Yu says, great presentation. Thank you. I appreciate it. Could you explain more about the recent reduction in unit costs? Yes. As a cost for IUL is one of the most important concerns for a client. I think that might be a great selling point. Zhang, absolutely. Thank you so much for that question and bringing attention to that. Folks, we had, on the financial side for a client, we had two major changes that came out in December. The first was that we reduced the minimum no lapse premium to half of target premium. Just means your clients are going to find it easier to keep this policy in force, even if they fall on hard times. Okay, but that second big change that we made on the financial side for a client is that we reduced the per unit charge. So you think about this. What are you currently paying for today that costs less than it did 6 months ago? Because of inflation and the economy, nothing costs less than it did 6 months ago except this particular product. And it really shows the character of the leaders that you're dealing with when you choose to partner with Transamerica. And this goes to Aegon's commitment to you. This goes to Transamerica executive leadership, their commitment to you and your clients, because we found tremendous savings when we went to, and by the way, we are front runners, leaders in the industry when it comes to non-medical underwriting. And we didn't know that was going to be the case when COVID hit, but it certainly has proven to be very, very true thanks to Bill Wysong and his team and the underwriting side of things. They are so good at what they do. And we found savings in non-medical underwriting. And instead of filling Transamerica coffers or filling Aegon's coffers with those savings, Aegon and Transamerica decided to pass those savings on to your clients. And so that's why you see this reduction in per unit charge that we got in December. For some clients, they're going to see a reduction in 10%, a 10% reduction in per unit charge. And that is a big, big deal. Thank you, Zhang, for that. I appreciate you giving me the opportunity to explain that to folks. All right, Luce says, can a parent's IUL be placed inside their disabled child special needs trust? Disabled child special needs trust. And that is an advanced markets question. Luce, reach out to your local wholesaler, and they will be able to contact you and help you around that very unique situation, probably just outside of the scope of what we cover today. All right, Geraldine says, for the business owner, do you offer key person insurance? Absolutely. Absolutely. Key man insurance as well as executive bonus. You can use the IUL for both of those. It is a great idea. Thank you, Geraldine. Mnet says, with the IUL, besides critical and chronic, is long-term care included? Long-term care, no, you've got to qualify for long-term care rider. It's technically a separate product in and of itself. It's the FFIUL with long-term care. But with long-term care, you could have the critical illness rider and terminal illness. Obviously, that is built into every policy. All right, Mila asks, I heard California. For state-specific questions, find your local wholesaler, RVP, or call that sales desk for state-specific questions, folks. I'll give that number for the sales desk again. It's 800-322-3796. Okay, Arena says, client has a concern regarding the increasing rate of the long-term care rider as they age. How do you handle this concern?
Compare it to something.
I think, Irina, cost is only an issue in the absence of value. And the fact is, the older you get, the more valuable that rider becomes. I'm certainly more than willing to continue to pay premiums for that rider as I get older. And I hope your clients would understand that as well. Okay, Ramaya says, how much can the client take a loan from the policy? Accumulated value or face value of the policy? How much is the interest? Okay, I'll kind of do a surfacey answer here. So when you're talking about taking money out in the form of loans and withdrawals, stick to 90% of the cash surrender value. But if you're going to take that much out, I'd highly recommend you start paying premiums again. Most clients will not take that much out, even though they have access to it. Most of our clients will use this money to supplement their retirement, to make purchases for maybe some larger purchases, but not something that's going to drain all of that money out of a policy. And then somebody said, oh, how much is interest? Well, we work with wash loans at Transamerica. And so after 10 years, you get credited the same amount of interest that is charged on that policy, or on that loan. So it becomes a wash for a client. You can read more about that in a product guide. Great question. All right, Gloria says, does TLB also have the chronic illness rider and some of these advantages. TLB, Gloria, I'm not sure. TLB, just clarify for me, will you? All right, very good. Next question. We don't need the long-term care certificate if our license is life and health. Yep, just make sure, Fritzy, that you have your life and health license in the state in which you are going to get the policy signed. All right. Lone Tran says, I had FFIUL policy 7 years ago. Did it have the concierge planning rider, or can I add it? No, that's going a little too far back. Our policies that will include the concierge planning benefit rider, they will go back to December of 2018. The policy title is CSO 2017. If that is the title of the policy that you own, that will include the CPR rider. Just make sure, though, that we get a waiver notice. We need a waiver to share your information with Everest in order to add that. Okay, very good. Is long-term care rider an indemnity or reimbursement? Great question. We get that all the time. Transamerica pays on indemnity. Indemnity. Okay, it's not cash indemnity where we just, we just take a client's word for it. We do need to see receipts once a month. If you could just submit a receipt, show us proof of loss. We're happy to pay all the way up to the maximum that the rider allows. Good question, Al. Eric says, when would a base insured rider make more sense versus a separate term policy or vice versa? I would say this, Eric. I would recommend far more often than not that you buy a separate Trendsetter LB policy instead of the base insured rider. Cost is one of the reasons, but the biggest reason is if a client becomes critically or chronically ill, you can use that term policy to get the claim from that and then keep that permanent policy, that permanent IUL intact. It's a great combo solution for a client. So you buy a permanent FFIUL along with a Trendsetter LB. Client gets sick, you file a claim through Trendsetter. You'll be able to keep that. You'll be able to protect that FFIUL and pay for some of the medical expenses that client incurs as well. It's a good strategy to use. Ernesto says, can the insured add a long-term care in his policy after issuance? Yes, you can. You just need to increase the face amount, 25%, increase the minimum no-lapse premium, 25%, and go through underwriting to get that long-term care added. You can do that after issue if you do those things. Wiley says, does long-term care of FFIUL require chronically ill? Yes, client has to be chronically ill. If a young man got injured but they're expected to recover, can he claim long-term care benefit? Of course, as long as he cannot do 2 of the 6 activities of daily living, which is the definition of chronic illness, he can file a claim for long-term care. Oh, yes. Moving on to the 2 QR code screen. Thank you for the reminder there. Akinwumi says, can you show the barcode again? Yep. Okay, I got you there. Eric says, can you go back to the question to ask questions to ask? Which I think was, not the brand strategy. Questions to ask. There it is. Some good discovery questions for you. Thank you, Gaylord. All right, Diego says, is the 2% long-term care draw after a claim available monthly? Yes, a client could get paid out monthly if they'd like on long-term care. Vicky asked for the presentation. Remember, you can find that at the bottom of your screen. Christina says, if one becomes chronically ill, then they can claim against chronic illness rider. They would file a claim. I think I'm following you. Yes. Chronically ill, you would file a claim. Jan Fen says, once a client claims long-term care, does the death benefit still increase? Let me put it this way. If you're taking money out of an IUL, it's very likely to draw that death benefit down. So I would say I can't think of a scenario, especially if you're taking big money out of there, where the death benefit would continue to increase. What we would do typically in practice, once a client gets on claim or starts taking money out of a policy, level the death benefit, reduce that cost. All right. Lonnie says, long-term care rider. Does the long-term care rider apply to participation states? Apply to participation states in regards to asset protection. Help me more, Lonnie. And that's probably a little more of a tax question, which can't give tax advice, but maybe beyond what we're dealing with today in today's presentation. But if you can clarify what you're asking, I might be able to help you. All right, Samuel says, great presentation. Thank you, Samuel. Is there a recording? Oh, yes, recording will be available. If you signed up for this, we have your email. You're going to get a recording back, and you'll see that link in the coming days. Coming up on the final questions here. Great Q&A, folks. Antoinette says, can critical and chronic illness be added? Where did that go? To an in-force policy. No, Antoinette. So if you want critical or chronic illness, you have to have that at time of issue. But guys, it's so simple. It's so simple. All you have to do is check a box on the app. That's all you have to do. You just have to say, yes, I want chronic illness. Yes, I want critical illness. We'll add it to the policy. The client does have to qualify. There is some extra underwriting, but just so you know, it's so easy, but you ought to do it. Okay, Rashonda says, can an FFIUL stand in place for a disabled child? I'm not sure what you're getting at with that one. Sorry, Rashonda. Okay, Lonnie says, participating states allow people to keep assets equivalent to their long and not have to spend completely down to get Medicaid. Okay. Yeah, that's beyond what we're doing. Check your states, Lonnie, and the specifics of the rider. Sorry, I'm just not able to help you that question. Something I would have to research. But they're happy to do that, though. Call the sales desk. We can get that question answered for you. All right, let's see. Good question here. Lilibeth, can a client who's in the military qualify for an FFIUL? Yes. We love military clients. Absolutely love military clients, folks. And they can qualify. They just need to be aware for underwriting. They can't be sent to a hazardous zone. Okay, but most of our military is not being sent to a hazardous zone. That's a select few for the most part. So just be aware of that. That's just a little technical side of underwriting, but absolutely we help people in the military every single day. All right, Spencer says, someone says, Dave Ramsey says, whole life is the worst thing you can buy. Give my best rebuttal. Well, that's probably outside of the scope of this presentation here, Spencer. Appreciate the question. Is whole life the worst thing you can buy? Probably not. FFIUL is a lot better, and I think we've stated a pretty good case for that today, because these features that we talk about, not only are they unique to the IUL world specifically, but when you talk about the world of insurance and the breadth of products and solutions that you have available, the IUL stands atop them all. There's a reason why we sell so many of these, and why this particular one happens to be the number one selling IUL in the world, and went through that today. So hopefully that was helpful for you. Thank you for the feedback. Rashana says, the Gift of Life IUL strategy to sell with a child with special needs, that's going to be a little bit tough. I'll get to that. Check the underwriting guide for juveniles, though, folks. You just want to make sure we don't disappoint a family. If a client wouldn't, if there's special needs, something, a lot of times they would be excluded from being able to buy a policy. All right, Angel says, do you need a life and health license to add chronic? No, you don't. You don't need a health and life license for that. It's just that little rider, check the box. Alan, thank you. I appreciate you as well, my friend. Thanks for the feedback. Rajwinder says, he has a comment. You have your slide to it. Oh, thanks, Rajwinder. Appreciate it. I'm doing the best I can with the technology available. Thank you so much. And I've got to read the questions. They're on my screen to my right. Okay. Very good. That will wrap up the presentation. That's the end of the Q&A. Let me just finally reiterate, folks, we're committed to helping you as you help families across the globe. If there's anything that we can do for you, please reach out to the National Sales Desk. You can reach them at 800-322-3796.